Hi everyone. So in today's video we are going to solve quiz from chapter 10 and this one is related to IAS 38. So these questions are from the study hub. So if you are financial accounting student, so this video is going to be useful for you. So stay tuned with this video, watch it till end. Previously we have solved up to chapter 9 and in today's video we will do chapter 10. So once we are done with quiz and we will come to the practice one question, and I guess there are there are lots of questions in the practice section, so we will do that as well. So in today's video we will do chapter 10. So let's start. This one is from the IAS 38 and the first question says XYZ company undertakes a development project which has incurred $1.5 million of expenditure that can be capitalized in accordance with the IAS 38. It is expected that the knowledge gained from the development project will be available to use on commercial basis by the business on 1st July 20x4 and will be used for the period of 5 years. XYZ company has a policy of pro-rate depreciation and amortization. So how much will the profit of XYZ company for the year ended 31st March 20x5 fall as a result of development expenditure? So this is very good question. So if our expenses are related to research, in that case we transfer or report directly into the P&L. But if it is related to development one, in that case we will capitalize it as intangible asset and we will amortize that cost as well based on the useful life or the percentage of amortization that might be given. But one thing I would like to mention for this kind of question, like for calculation of depreciations, please look the few things in the question. The first, the year end, and in our case year end is 31st March 20x5. And second thing that you need to look whether the company policy is to provide depreciation or amortization in the first year or not. And sometimes they will also say to prorate, like in our case. So whether that is also case or not, right? So if you don't look this kind of information in the scenario or question given, then you will lose the marks even though you have gone through your own way. Everything is right, but still you missed the one sentence that could change your answer. So even the 1 mark is very important to pass each paper, right? So that's why please look for this kind of information. So in our case they asked to prorate, means that means they are providing the amortization but not in the full but in prorate basis. Prorate means that you need to proportionate. Okay, so I will show you how. So our year end is 31st March 20x5. So what will be the year start? It will be 1st April 20x4. And when does they have ensured that this cost need to be capitalized? The date has not been mentioned, but they are expecting to use this in the business for commercial basis. To concept knowledge that they have gained from the 1st July 20x4, right? So that means July, August, September, October, November, December, Jan, Feb, March. It's only 9 months. Okay, so we will only show 9 month amortization in the current year 31st March 20x5, right? So if the question has mentioned that they are not unsure that when there will be commercial use, in that case it will not be capitalized, right? The full amount 1.5 million will be shown in the P&L. So you can see there is option of D as well of 1.5 million, but this case will only be this can only be happen if this development criteria has not been met. But the question clearly says it is capitalized according to IAS 38 and also mention the date from which commercials uses begins. So from the commercial use begins, we will start to amortize. All right, so our option D is incorrect. Similarly, now we got to know even though we are capitalizing, right? So as we got to know that there will be amortization as well, so it won't be zero, so we can eliminate option A as well. Now either B or C could be the right answer. So what we can do is we will open the calculator. So what is the total capitalized cost? It's 1.5 million, but for now I will take the 30 common to make my calculation simple. 1500. And what is the useful life? It's a 5 year. They clearly mentioned 5 years. So if I will divide by 5, it will be 300, and just multiply by 1000 because I have taken the 30 common. So 300,000. So this is the amortization for the full year, but in the question they said to prorate, so we can't show 300 into the P&L. But if you look the option, there is 300 as well, so which is incorrect. So we got to know our answer is B, but still confirm. For confirmation, we will multiply 9 and divide it by 12. Then that's a 225, as I have taken 30 in common for the calculation purpose, and you can multiply by 1000. That will give exactly the option B. So this is how you can figure out the right answer, right? Then next we have B, right? Okay. One of the following is an example of intangible asset. So you guys must know the difference between the tangible and the intangible one. So tangible one is that which we can see, right, touch, but intangible is which we cannot see, right? So our first one is a lease of land. This one is the tangible asset, and there is separate accounting standard for particular one. So option A is incorrect. Then we have a registered trademark. Yes, trademark is intangible asset. And the next we have a royalty receipt. It's a receipt. Basically, it's your income, not the like intangible assets. So again, C is out. And the last one is investment in an listed company. So it's a tangible one, right? So will also be not be intangible assets, so only B will be the correct one. The next we have IAS 38 provides example of research and development activity, for example, formulating new products, testing of pre-production prototypes, and designing tools involving new technology, constructing a pilot plant. Which of these examples are development activities? Okay, so you guys must be family again, must know the difference of like when we will show it in the expense and when we will show it in the development, and there are few criteria as well, right? So our first one is formulating the new products. So this one is basically we are considering the research, so it's in the early stage, right? It's in the early stage activity. Okay, so if we talk about our development activity, this activity will include your application of research finding to your plan or like design of the for the production of new product or new material or new device before commercial production or use begins, right? But this one, the first one, is at the early stage of the activity, so it's basically a research, not the development activity. And next we have a testing production prototypes. So it's a development activity. Why? Because it involves your refining a product before your commercial uses, right? So it's the correct one. Then next is C, designing tools involving new technology development. So it's like application of the finding, right? So that means you're finding the new technology to design the product, right? So again, it's a development because we are manufacturing the tools that will use in the production, right? So again, it's example, I mean activity related to development. And the last one is constructing a pilot plant. So that means we are constructing a small factory where we can test our product, right? So yes, it's also related to development activity because commercial productions because the trial is happening before the commercial productions, right? So again, this is your development activities. So except one, the rest are your development activities. So that means your option D. And for one more thing, for this kind of like option, if we got to know one is incorrect, so our A, B, C is already out because it's having the statement 1, example 1. So we can clearly come to our answer, that's a D, right? Then next we have, in which circumstances, just wait, yeah, in which circumstances should straight line amortization be applied to an intangible asset? The first one is a pattern of consumption cannot be determined reliably. So basically, what I mean to say, when an intangible assets like your trademark, any patent, right, so it is used over time, we amortize it. So this simply means that we are spreading the cost of that asset over its useful life. But according to IAS 38, what it says, if you can clearly see how asset can be used over a time, then suitable amortization methods should be used based on the pattern, the pattern of its uses, like. But if you can't reliably figure out the pattern of its uses, in that case just use the straight line method. So option A, exactly what that has been said by our standard. So option A seems to be the correct one. But again, let's evaluate why other option is incorrect. B says a residual value is assumed to be 0. So this affects our total amortization cost, not the method that we are using. Right. The next we have amortization expense will be included in the carrying amount of another assets. So again, this is all about how we are recording the expense, not about the method that we are using. Okay. And the last one, its useful life depends on the useful life of other assets which are amortized or depreciated on the straight line basis. So again, this is the method. The method is based on its own uses or pattern, not the other assets. Right. So its own use of asset will determine the method to be used. So A is the correct. Now next, a company has incurred the following cost in operating a pilot plant for the manufacture of the new product. Remember the pilot plant example in the question number 3. So amortization of license, what the requirement is, which of these example are development activity. So again, it's similar to the previous question. So under IAS 38, the development activities can be happen after research. So simply you are just applying your finding, your knowledge to create or improve the product, process or design before commercial use, right? Now the first one is the amortization of license granted to manufacture the product. So amortization, this is needed to make the product, right? So it's, if it is used during our pilot plant operations, so obviously it supports our development. So it's a development activity. Okay. So again we come to our right answer. I mean we will eliminate the option because we know one is correct. So in that case our option D is out. Then second one is expenditure on material consumed in the operation of the plant. So material which are used to run the operate the pilot plant, which is in the testing production. So it's also a development activities. Okay, so again 2 is correct. So in that case our option C is out. Now either A or B could be our right answer. Now third one, cost incurred in training staff to operate equipment in the plant. So IAS 38 says that training costs should not be capitalized. Okay, so it's not related to the development activity. So in that case, our answer is B. And the last 4 statement says depreciation of the equipment in the pilot plant. So obviously, if we are using any equipment in our pilot plant, so equipment is used to make or test the product in the pilot phase. So yes, it is the development activities. Okay. So yes, we are done with the question. Let's see. Okay, so in next video we will do chapter 11 questions. So stay tuned with my channel for that.